Hey, happy Monday, everybody. It's Paul Brantz with your Monday market update. We got a lot to talk about today. NAR, we're going to talk about NAR settlement, how it's going to impact you as a buyer, as a realtor, all that great stuff we're going to talk about. And by the way, I really want to thank, and I don't do this often enough, Barry Habib, MBS Highway. They have a way of breaking information down that's very complicated for people like me to understand. And hopefully I can do the same and pass this on to you, because this NAR settlement statement is really going to impact you, especially if you're a buyer. You have to know what this looks like, and we're going to tell you. Then we're going to talk a little bit about interest rates, and then we're going to let you go. So what do you say we get started? And let's bring up our first slide, and it's going to talk about the NAR lawsuit. What happened last week? They got settled, $418 million settlement that goes into effect this July. So mid-July, this settlement is going to go into effect. So if you haven't bought a house yet, you really need to know what this looks like, especially if you're a buyer, because I expect massive changes. And yes, I use the word massive changes over the next couple months, not only from the lending perspective, but in the real estate industry. It's going to be interesting to see how this pencils out. And as we go through these slides, I'll let you know what I mean by that. So what does this have to do with? Well, there's a cooperative compensation agreement that has been changed. In the past, what has happened is that a listing agent, the person selling the house, would negotiate their commission and the buyer's commission. And then when a buyer would come and put an offer on the property, through the sale proceeds from the seller, it would pay the listing and buyer's agents. Well, this settlement came together and said, hey, you're totally misrepresenting. And in fact, the seller's not paying it, the buyer's paying it, because the purchase price has been increased to cover the buyer's compensation. So you can no longer do that. Well, as I've been listening to the media and listening to Barry Habib, the media has a really negative impact on this. And there's just a huge lack of understanding of how this is truly going to impact buyers. I mean, some people think buying a house is just as easy as going on Zillow, click, I want to buy this house, and bang, there we go. We're in contract. What you're going to see is perhaps that is not necessarily the case. But what does this lawsuit mean? What this lawsuit means is that the buyer's agent, so the realtor that the buyer has, compensation can be paid by the buyer, so it can't be paid paid by the buyer. Now, the buyer's agent compensation can be negotiated into the offer. So every time, if you're a buyer, when your agent puts an offer in, they can negotiate for their compensation as well. Where I think that's going to really hurt people, families in this market, is that if there's a lot of people bidding, all of a sudden the compensation of their buyer's agent may make or break whether or not you get the house or the offer accepted. And I got to tell you, you're going to find here in future slides that not having representation is a huge impact on your future with this home. I'm telling you, it is huge. Now, also, by the way, it remains to be seen how the underwriting guidelines will be impacted. Like, this is important. First of all, with VA specifically states that buyers cannot pay the buyer's commission. So either a realtor has to work for free for a veteran or hope that the seller will pay for it. But the veteran cannot pay for it. Secondly, this is going to impact lower down payment families. Let's say, for example, because what happens is that when you put in, let me scoot over here in the screen. When you negotiate the seller to pay for your your agent's commission, that's called a seller concession. But here's the deal. There's only a limited amount of seller concessions based on the amount of down payment that you can get. So if you put less than, let's say, 10% down, you may only get 3% of the sales price. And what if you're a low down payment buyer that needs to make an offer with a seller concession paying for your closing costs and your realtor fees? All of a sudden, you're either faced with, A, trying to find money that you don't have, or B, not having representation because you need your closing costs paid for. Now, I'm hoping over the next couple months, things will come out from underwriting guidelines stating that this, that maybe buyer's compensation won't be included in that calculation. But that is so huge. This is going to impact low down payment families, and that won't have representation. That's absolutely insane. The cost could raise. The buyers have not built to the deal, and the home value and seller negotiations. All those things can impact the value of the property. Now, people think that, you just make an offer that a real estate agent, doesn't do anything and they're not earning their money, but that's far from the case. Let me bring this up. Number one, being on the lending side and dealing with amazing realtors that we have that we work with, is that not only are they they're negotiating the price up front, but they're also telling you how to become more competitive in your offer. Should you remove the appraisal contingency? Should you keep it? What's it most likely going to appraise for? What are the comps? What's listing? What's pending? There's so much value up front that a realtor adds to you, how to protect your earnest money deposit. We've had about one or two buyers over the last couple of years going without representation, and they have no idea how to protect themselves. They don't know what to ask. They don't know, all the forms that need to be, to be filled out. They don't have access to the property and the inspections. What inspections should I get? Do you even know what a sewer lateral is? I sure didn't, right? I mean, there's all these things that come into play that unless you have representation, you're not going to know what to ask. I mean, ignorance is not bliss in this situation, my friends. And I really hope that we're going to see a lot of positive changes, because we need to make sure that we protect our buyers and our families, because they're not just buyers, they're families, that they do buy a house that things could have been disclosed, like the sewer laterals or electrical or stuff like that. So, putting a dollar value on a buyer's agent function will come under the microscope in the upcoming months, especially after July, when people have to start negotiating, and they have to choose whether or not to have a realtor represent them and go straight to the listing agent. In the past, people would say, if I just go straight to the listing agent, would I get a better deal? And the truth is, you really don't, because they are not representing you and they're not representing the buyer. Actually, they're representing the seller more. And so their incentive is to get this close, not to share with you how to get the best deal. Well, that's going to be more true here when you don't even have a choice for representation. Okay, I'm done. There's my rant. If you have any questions, always feel free to reach out to me. Our number one obligation is to make sure that you keep protected and that you know exactly how valuable our realtors are in this game of real estate. All right, my friends, let's talk a little bit about rates. Yeah, that's a lot, huh? That's a lot. Any questions, always feel free to give me a call. But I want to bring this up here. I want you to notice from March 13th on, you saw interest rates start to increase. And we're going to get into why. Here's the average rates right now. Now, remember, I love this slide because what it shows is that you can have the same credit score, but if you put more down, you're going to have a better interest rate. Interest rate is a function of down payment and credit score and program, obviously. And so there's are the average rates. Now, I'm really happy to say that on average, here's the average rates in online right now. I'm happy to say that our rates are anywhere from 0.5% to 0.25% better than all of these rates. We have outstanding rates. We're ready to make sure that we save you some money. And I think we're gonna find a way to help protect our buyers. I don't know what we're gonna do, but we're gonna find a way. But we have the interest rate piece checked. Now, last week, what happened is Consumer Price Index came out, and I got to tell you, inflation, we keep on thinking that it's going to come down, but here's the thing. My buddy John Wilson and I went to a gas station yesterday to get some treats for a soccer game. I left there with beef jerky and 2 drinks, and it cost me $35. I was floored. So it's hard to say that inflation is under control when you're paying that much for beef jerky and and a couple of drinks. But needless to say, rising shelter and energy costs helped push inflation higher than expected last month. And so as a result, we saw an upward pressure on interest rates. The housing market. Oh, I forgot about this one. This is a great one. The housing market's inventory crisis is finally easing, although it's going to get a little bit more interesting with what happened with NAR settlement. Fewer people are sitting on their mortgages as they adjust to higher rates, according to Redfin. That's huge because we've talked about that. The biggest issue we have is people aren't selling, and now because they don't want to get rid of their 2% rates, etc. And now we're starting to see people go, okay, maybe we'll, as the rates start hitting the 6%, we'll start moving on and go and sacrifice this lower payment for a more desirable area. New listings jumped close to 15% in February, the biggest year-over-year increase since 2021. Still, this isn't translating into lower home prices. We're still in that crisis, but we're seeing more and more inventory, which is always, always positive news. Just a reminder, between now and March 31st, if you close your loan with us, we have a program that will give you a 1-year buy down for free and pay for your appraisal. We're going to make it cheaper for you over the next 12 months and hopefully see your interest rates go down. We're also going to make it cheaper for you from a cash perspective at closing, so you don't have to pay for your appraisal. We got you covered. We're here to help you. That is a fact. Hopes and dreams. If you want to schedule a hopes and dreams conversation, whether you're ready to buy or not, this conversation, we're not going to pull application, collect documents, credit. We're just going to have a good old conversation, answer all your questions, utilize my 20 years of experience in this industry, helping families buy homes. And let's put a great plan in place for you. And if you want to get pre-approved, if you want to refinance, we'd love to help you. But with that, I am done. It's been a little bit longer one. I hope you have a fabulous week. Always reach out if you have any questions. Hopes and dreams. Oops, there it is. Hopes and dreams. If you want to set up a time to put a plan in place for your family. Paul Olbrandt's Clear to Close, bro.